This is Mark Anthony with Mercury Time Price Analytics, and welcome to our end of day futures trading video for Thursday, March 5th. Another amazing day. This is going to be a short video, but there are a couple important things I wanted to share with you. This was a picture perfect failed backtest to one of our proprietary pivots at 30.8250, 30.8286, forgive me, was the midday pivot back on Thursday. And we leave these midday pivots on the chart because they run on one of the key time cycles that the institutions run on. Now, I've mentioned this on other videos, and I briefly want to share this with you again as evidence that these are the same time cycles and algorithms the institutions use. If you and I and everybody we've ever met in our life put all our money together, we could not make the SPX futures stop on a dime like this. Not even close. The only entity that can make the futures stop on a dime to the tick like that are the institutions. And that's because these are the same algos that they're using. So as this moved up here, this was already on the chart. We were waiting for this back test, plus the fact that 82 has been the pivotal price point all week long. You pull this chart back and you can see here's the 82. You've got enormous volume and enormous battle over that price point here, 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 here again, and this is our swing trading chart here. So this is a longer term cycle. If we show you that on this, it's just enormous. All the the battles that have been done at that level. So we had a phenomenal trade off that level for our subscribers. On our trade alerts, everything is managed in real time. We explain the setup on the mic. We've got a live chart through Zoom, so we talk about the setup, and then you can see the actual trade alerts on the Slack channel. Have them pushed to your device, whatever you want. But this is as nice a back test as you can get. Now, there was also a short entry. This was right into the end of the day, and this was actually a swing trade. We had an algo pivot. And I've got to pull the chart back just a smidge to show you that. We had an algo pivot into the close here yesterday. And it was right here. It was literally right at 31.20 into the RTH close. And then you had just a little bit of overshoot as they settled the market on close orders. That swing trade was entered. It triggered there at 31.20. But it was entered at 31.26, and it was taken off at 30.19. So you had a 107 handle swing trade, that was initiated at the end of RTH close yesterday and taken off early this afternoon. So that's why we like to cater to different trading styles. You got your day trading algos over here, swing trading over here. And yesterday, the pivot on one of our oversold oscillators came in precisely at 31.20. Now, I wanted to share with you something that we've never shared on one of these videos before, and that is how our legs started. Legs down at significant price points, legs up when you have a significant low. What you see on the chart here are different algorithms identified by these different colored lines. So you got a purple algo, you got orange algo number 2, orange algo number 1, white dotted algo, white solid algo, white dashed algo, cyan algo. Now, first thing notice here is you had in this cyan algo moves very, very slowly, very long cycle. You came up into it. The high on this particular screen is 31.04. That algo's coming in about 30.95. You break the confluence of these two. Whenever you have multiple algos that are bunched together, a break either down through or up through, if we're talking about a significant low, they become very significant. Now, here's what happens when you get a major move. You get all these bunched together. Now, right here, you've got the purple algo. You have both of the orange ones. You have the white dotted algo. You've got the solid white algo. all these are bunched together, and you can see on these two orange ones, I mean, they're literally meshed together. So here was the move we had today, up to 30.82. And when that broke, which you can see here, I mean, it was identified right there by our horizontal lines here. And these horizontal lines are algo pivots. What you see over here, these are proprietary algorithmic oscillators. But when these oscillator algos all bunch up together, and when you're talking about breaks of these longer term ones, here you had a longer term one and a shorter term one. But the point is, when you have all these bunched together and they break hard, they break fast, and this is what you get. So you had the same thing at the all-time high. We had the same thing today. Now, we came down here to 77. Who knows if we get a bounce? Tomorrow's a payroll report. Who knows what we get tomorrow? But I just wanted to share this with you because this is not anything that we've ever put out on any of our videos before. But every significant high and every significant low all start with this exact same thing. When all these algos that are run from very, very short time cycles to extremely long time cycles, you can see how very slowly this purple one moves and this cyan one moves. But normally, if you were looking at a number of different oscillators, let's say you had one going like that, then you had another one lower, they would all have the same relative spacing between them. When they all bunch up like this, it's like a fortification of a dam, multiple walls, for example, if you will. And when they break, that's what they do. And just like we had those lows back in significant oversold lows in August, September, October, it's the same thing in reverse. The market gets very oversold. You have all those pivots there, or all these algos, which would be oriented at the bottom in that case, and boom. And they break right back up, and then you get a significant move. If you haven't been to our website before, it's mercurysignals.com. I also wanted to share with you our bond algo and our crude oil algo, because we give you everything in one package. Now look, if you don't trade bonds, it's still very important that you have bond algos on your screen. Forgive me. Why? Because you can get a whole lot of clues from how the bond market trades relative to your trading in ES. And notice that we don't have a ton of algorithmic pivots, these horizontal lines here. You don't need them, because the automated algo, which you see right here, this cyan line, pardon me, and these little white dots, the algo does the work for you. So here you had a long entry right about 171 up to 176. So let me give you a little bit more precise. It was right about 171.21 up to where we're printing now, 176. So you have almost 5 big handles on a move that went long today. And again, if you don't trade bonds, if you're trading ES, you need to have this on your screen, and we give you everything. You get the ES algo, you get the NQ algo, you get the bond algo, you get the crude oil algo as well. And you can see these all day long. We have a live chart through Zoom. We give you a new passcode each day, and you can view all of these. Now let's take a look at crude oil. And same thing in reverse from bonds. Here you have crude oil right here. The entry was right up there, about 47.36. $2 in crude, 5 big handles on bonds in a day. Do the math on that one. So if you go to our website, which is mercurysignals.com, and please forgive the cough, seasonal allergies here in Florida. It's mercurysignals.com. Punch that in on your browser. It's going to take you to our website. And we're running a special right now where you get the ES, the NQ, the bonds, and the crude oil, all for one very low price. So essentially the way we've got this priced, you're paying what you would normally pay just for the ES and NQ algo, and you're getting the bonds and the crude oil for free. And so even if you don't trade bonds and crude oil, well, guess what? It's really important when you're trading ES to have the bonds and the crude oil on your chart. So we thank you so much for your time. God bless you. God bless your family. And we hope to see you again soon.